Even though the market was under pressure, our largest trending trades saw pyrotechnics and a decline in earnings. Even viewing parties for the quarterly results of NVIDIA were held. The company is doing quite well. Revenues have more than doubled. As they say, sales would increase by 80% if there were an equivalent point. They spoke quite positively about resolving certain supply limitations around their next-generation semiconductor chip, although I suppose that's less than the more than 100% they were accomplishing. Naturally, the most important question is what to do with the stock. Over the past year, it has been a high flyer. Lately, it has been stabilizing. I'll put it to a bear, but technically he has a neutral on the stock. So let's put it to a bull. Let's introduce Gil Luria, a senior software analyst at D.A. Davidson, and Dan Ives, an analyst at Wedbush who works for the bulls. Let's start with you, Dan. As the stock is under pressure, what caught your attention during the quarter? How would you characterize the response? Indeed, and notice that it's under pressure. I believe that this stock will rise in the days ahead. This quarter was a masterpiece, you see. In light of what we witnessed from the standpoint of demand, they ought to publish the press release and display it at the Louvre. What transpired was worse than the anxieties raised by the Blackwell delays, and that prediction for the upcoming years, in my opinion, simply sets the standard for the godfather of AI to continue to over-deliver and under-promise. With a $4 trillion market and $4 trillion market capitalization in a year, I believe the AI revolution is only getting started. Gil, I'll challenge you, because from what I remember, your concerns are almost never related to what NVIDIA is doing now. What will occur over the following 3 to 5 quarters is more important. Yes, exactly. The biggest clients of NVIDIA have stated that they plan to purchase as many GPUs as possible this year and may even expand their purchases the following year. However, they must eventually see a return on their investment. They must provide a return on that investment to their clients. That isn't occurring at all. There is a lot of gamesmanship going on amongst these firms at the moment. Google, Amazon, Microsoft, and Meta are attempting to ensure that they are not last in terms of data center capacity. It's referred to as overinvesting. Additionally, overinvesting implies that you will eventually need to wind down your investment, and that might occur as early as the following year. NVIDIA is currently expected to generate $200 billion in revenue by 2026. Microsoft's margins will be reduced by 2, 3, or maybe 4 percentage points. In order for that to occur, according to Dan and myself, who cover Microsoft, the company's margins are dropping this year, and its shareholders won't put up with it for very long. Your answer, Dan? Let me explain. I believe that Gil is referring to customers who require proof of ROI and use cases. Furthermore, there is no question about the demand curve's appearance. Since this is more than just NVIDIA, I believe the next phase, which we have discussed, is the development of a fourth industrial revolution. It concerns plays with second, third, and fourth derivatives. If you look at earnings, you look at what the Godfather discussed last night, which is essentially the first or second inning in a game that lasts 9 innings. AI capital expenditures of trillions of dollars are emerging, and look, we still see it. So I simply think we're battling that tendency. The AI party starts at 9:00 p.m. and ends at 4:00 a.m. Gil has been invited to the party, you see. I'm not suggesting that the music stops at one point. It's 9:00 p.m., and there is glass on the dance floor. So if you don't agree that the celebration will end in 3 to 5 quarters, look, D, I believe it will be 4:00 a.m. at one point, and there may be parties after that. However, I think this will surpass NVIDIA as long as the return on investment is present, not only on hyperscalers but also on governments and businesses as it all begins to happen. In my opinion, this is the cornerstone of the IT bull market that will emerge in the upcoming years. $1 spent on NVIDIA chip multiplies by 8 to 10 in the tech industry, as you said in your note. Describe how that operates. The larger news you see is that Gil mentioned Microsoft. Purchasing NVIDIA chip is just the beginning. Which software is it? Which hyperscale is it? What is the application? How is the infrastructure? That is the multiplier across tech, which is why the bears have been in hibernation mode for a few years. I mean, it was nice to hear from them last night for a short while. Additionally, they occasionally come out, When I don't see them, I worry about it. However, I believe that trend will continue. So, Gil, here's Dan telling you that you have. What are your thoughts? I want to start by saying thank you for inviting me to the party, Dan. D has emerged as the spokesperson for this AI revolution. No better man could have been affected. My prediction is that, in a year, the majority of generative AI will be implemented on Android or Apple devices rather than NVIDIA CPUs. Since AI is still in its infancy, the celebration will undoubtedly continue. Simply put, NVIDIA will no longer have sole control over the hardware that AI is implemented on. We believe that companies like Apple, Google, Amazon, and Microsoft will begin employing their own processors for these kinds of inferences and even a large portion of the training. NVIDIA will own a significant portion of the market, but not the whole market as it already does. Dan, I want you to realize that the other hyperscalers who are currently clients will soon start to compete with you. I'm waiting for that to happen with Apple and Qualcomm. Therefore, is this a threat that ever materializes, or is it a genuine threat? Well, I believe this is. They want an increasing amount of share. Additionally, I believe that all of the hyperscalers will attempt to acquire more of that element, much like Microsoft would pursue more of the apps. Since it's the largest trend in tech investment since the beginning of the internet, this is going to be something where tech, it's almost co-opetition, plays out. Additionally, businesses won't just hand that out. See, that's why I believe this is a larger AI party as it develops. When Gil attends the gathering, I will save my purple sports jacket for him. Okay, Gil, what are your thoughts? Do you have any plans to wear the purple sports jacket soon? I'm hoping so. I hope the celebration goes on. Since our clients are NVIDIA shareholders, I sincerely hope so. We currently favor Apple and Amazon, but I hope the stock continues to rise. Let's discuss that then. I believe you both agree that there is no doubting that this revolution is happening, and that it will change the game. Perhaps there is a difference between where you go for it and how do you play it. Let's back off a bit. And Dan, I understand that NVIDIA might rise in the next days, but I'm wondering whether there's simply buyer fatigue or exhaustion from being so heavily invested in these companies. Who doesn't still own NVIDIA after all? Where does the additional buyer come from at earnings viewing parties? Does the fact that there appears to be interest in other areas of the market as rate reduction approach make the rally vulnerable? I don't agree. I believe there are still a lot of people who haven't truly participated, but I don't want to call them underweight. In high school, NVIDIA is LeBron James. The idea here is that this will continue to play out. Additionally, investors are increasingly demonstrating that this is not hype. Therefore, I believe you will continue to see them in the end. In comparison to what we're witnessing in the tech industry, this is truly the most empowered spending that our generation has ever witnessed. You have to examine where the demand is. Isn't that the reason for the second trip to Asia in the past month? You won't find it in the 10 keys or spreadsheets of an office building in New York City, really. From an iPhone standpoint, the iPhone 16 has more than 90 million users, compared to its initial 80 to 84 million. And that's encouraging based on what we think supply chains are telling us about the next AI-driven supercycle with the iPhone 16. And I continue to think that Apple is about to have an understated demand cycle. However, you then discuss simply broader demand. Demand is still increasing rather than decreasing. Additionally, I believe that some of the tariffs in the US-China tech war are concerning. And I believe that, going into November, that will likely be the most important question from investors that we meet. What do you know?